Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in corporate filings to give you the real story. And today we're diving into something that tells us about a big change for JBT Marel Corp. It seems like they're shaking things up, and we're going to find out exactly what that means for their business and for investors. So what's the big news? Well, JBT Marel Corp has just amended its credit agreement, and it looks like they're also getting ready to launch a significant offering of convertible notes. Let's break down what these moves might mean for the company's financial health and its future plans. The very first thing we see here is the date of the report, September 3, 2025. This tells us the events we're discussing happened very recently, giving us a snapshot of the company's current strategic direction. This is a Form 8K filing. This is basically the company's way of telling the public about material events that happen between their regular quarterly or annual reports. So when you see an 8K, it usually means something important has gone down. And here's the company in question, JBT Marel Corporation, also known as JBT Marel Corp. Their stock is traded on the New York Stock Exchange under the symbol JBTM. This is the main way people buy and sell ownership in the company. Now we get to the juicy stuff. Article 1.01 tells us about a new agreement. This is the second amendment to their credit agreement. So what did this amendment do? It reduced the cost of their borrowing. They removed something called a credit spread adjustment, which is like an extra fee on top of interest. This means their loans are now cheaper for them to use. They also changed the interest rates on their revolving loans, which is basically a line of credit they can draw from and pay back as needed. The interest rate is tied to something called SOFR plus a margin. The margin is the part that changed. They've narrowed the range and in some cases lowered the maximum rate they'll pay, making their borrowing costs more predictable and potentially lower overall. They also adjusted the fees they pay for having this credit line available even if they don't use it. This is called a commitment fee, and now they're paying it on the unused portion of the credit line with a slightly lower range. This is another move to reduce their borrowing cost. But perhaps the most significant part of this amendment is that it allows the company to issue unsecured convertible notes up to a whopping $600 million. This means they can now borrow money by selling bonds that can be turned into stock later. This is a big deal because it opens up a new way for them to raise capital, and it's a signal that they might have plans that require a lot of funding. Moving on to Article 8.01. We find out more about what they're planning to do with that ability to issue convertible notes. This section is all about a convertible notes offering. Right on that same day, September 3, 2025, the company announced they intend to offer $500 million worth of convertible senior notes that will mature in 2030. These are being offered in a private deal to big investors, qualified institutional buyers. This is not an offer to the general public, and they've also given the buyers an option to purchase an extra $75 million worth of these notes. This means they could end up raising up to $575 million in total from this offering. Now, this is where it gets a little complex. When companies issue convertible notes, they often do two other things called convertible note hedge transactions and warrant transactions. Think of it like this: the company sells a bond that can become stock, and to protect themselves and manage the conversion, they might enter into separate deals with financial institutions. These deals help offset some of the risk and cost associated with the convertible nature of the notes. This press release giving us this information is attached as an exhibit, so you can look at the original wording if you want. This next part is really important. In connection with this offering, the company provided potential investors with pro forma financial information. This means hypothetical financial statements that show what the company might look like after this offering and after their previous acquisition of Marel half. So they've combined their finances with the finances of Marel, which they acquired earlier. The pro forma statements give us a look at their combined income for the year 2024. This is crucial for understanding the combined company's performance, and if this new debt offering makes sense. Again, this pro forma information is provided as an exhibit for anyone who wants to dig into the details. And finally, they've also provided management's discussion about Marel's financial condition and results of operations for the last 3 years up to 2024. This gives us a deeper understanding of the business they've acquired and how it's been performing. Here's a list of the exhibits attached to this report. Exhibit 10.4 is the actual amendment to the credit agreement. This is the legal document detailing all those changes we talked about earlier. Exhibit 99.1 is that press release about the convertible notes offering. Exhibit 99.2 contains those vital pro forma financial statements showing the combined company's performance in 2024. And Exhibit 99.3 is the management's discussion of Marel's financials. This section is just the formal sign-off by the company's authorized representative, usually a high-ranking financial officer. And here's the signature. Matthew J. Meister, Executive Vice President and Chief Financial Officer, signed off on this report. So what's the story here? JBT Marel Corp is clearly in a phase of strategic financial maneuvering. They've managed to reduce their borrowing costs by amending their credit agreement. This is generally a good sign showing they're optimizing their debt structure. But the big move is the planned offering of up to $575 million in convertible notes. This is a significant amount of money, and it tells us they likely have ambitious plans, whether it's investing in growth, paying down other debt, or funding further acquisitions. The fact that they're using convertible notes suggests they might be looking to raise capital without immediately diluting existing shareholders too much, because bondholders only become shareholders if they convert. The inclusion of pro forma financial information is key here. It shows investors the potential financial picture of the combined JBT Marel entity after acquiring Marel. This is what professional investors will be poring over to see if the acquisition is integrating well and if the company is on a solid financial footing. Now, for my take on this, JBT Marel Corp is making bold moves to strengthen its financial foundation and likely fuel future growth. The reduction in borrowing costs is smart financial management. Any large company needs to keep its debt expenses in check. The convertible notes offering signals confidence in their future prospects and their ability to manage this new layer of financing. They are essentially betting that their growth trajectory will allow them to comfortably handle the interest payments and potentially see those notes converted into equity later at a higher stock price. This is a common strategy for companies looking to expand their reach or invest heavily in their operations. However, issuing debt, however it's structured, always comes with risks. Investors will need to closely examine those pro forma financials and management's discussion on Marel's operations to ensure the underlying business is strong enough to support this new debt and to achieve the growth that justifies it. The success of this strategy hinges on JBT Marel's ability to generate sufficient cash flow to meet its debt obligations and to execute its growth plans effectively. The key takeaway here is that JBT Marel is actively shaping its financial future with a focus on optimizing costs and securing capital for what are presumably significant strategic initiatives. It's a sign of a company that's not standing still and is actively pursuing its goals. What do you all think about this move by JBT Marel? Is this a smart financial strategy or a risky bet? Let us know your thoughts in the comments below. If you found this breakdown helpful, give this video a thumbs up and subscribe to Corporate Decoder for more deep dives into the financial world. Don't forget to join our Discord community, linked in the description for more real-time discussions and insights. Thanks for watching, and we'll see you in the next one.